This is very likely one of the most important videos that I will ever put out. So with that said, buckle in, get your coffee, and I hope you watch till the end. So what I'm going to talk about today is what I call the Domino Theory. And it's going to be a little bit of macroeconomics, it's going to be systemic risk, and it's going to be a sequence of events that could cause pretty significant change in the financial system and how blockchain, smart contracts, regulation, and a shift in global economic power takes place. So the main components of this, I'm going to talk about each domino and their implications in the change in the pattern that would have to play out. And again, this is a theory, but I think it's likely, otherwise I wouldn't be putting the video out. So we'll see. And stick around to the end because I think a lot of people are going to be happy with how this ends. Scary in the middle though. So this is going to start with Japan, and then we're going to talk about US Treasuries, and then we're going to talk about Tether, and then we're going to talk about Bitcoin, and then we're going to talk about the US stock market and how this sequence of events could cause a significant downturn in US stocks and the broader economy. All right, so let's start with Japan. This year, Japan is poised for pretty significant upside in their stock market. The Nikkei is almost back to its all-time high. It hasn't been here since the 80s. And, they're positioned to actually do really well over the next decade. And with that, we see them start to raise their interest rates, which have been even negative at some points over the last couple decades. And because of that, they've accumulated a very large position in US Treasuries. It's been more profitable for their government and other people there to hold foreign treasuries and US Treasuries in particular than it has been for them to own their own treasuries. So SBI is a very large financial power in Japan. Yoshitaka Kitao is the CEO of SBI, and he's a big believer in Ripple. SBI owns 10% of Ripple equity. They're a big believer in XRP, and we'll get to that at the end of this. They are also very progressive there in Japan, and they're working to issue a CBDC this year. They are likely going to be the first G7 nation to issue a CBDC. They're in the pilot phase of their launch of that, and the other G7 nations are still a bit behind. So it's likely that they will launch a CBDC, and with that, it may incentivize their people and their government and the banks to hold bonds associated with that may yield even higher than U.S. Treasuries. And because they are the number one holder globally, aside from the U.S. itself, of U.S. debt and Treasuries, this would be a catalyst for them to dump U.S. Treasuries. And so there's the first domino. What I'm watching for is a situation where Japan's economy starts to do really well. They're able to pull themselves even further out of the hole, either by issuing a CBDC or other economic factors, where they begin to dump U.S. Treasuries, and maybe they do it all at one time. And that's really the potential problem, is if they were to dump all that debt on the market at one time. The Fed has slowed their purchase of foreign treasuries. The main entity that's been accumulating purchases of treasuries over the last couple years has been Tether. So Tether is a stable coin that it provides the majority of the liquidity in the crypto market. And, if Japan were to dump U.S. Treasuries, it would cause a lot of instability in the Treasury market. The Fed they've already raised interest rates. They would have to raise them even higher. You'd see a spike, and the yield curve's inverted already. We've got 10-year Treasuries lower than 2-year Treasuries, which is not good. If you follow global and macroeconomics at any juncture or at any pace, you're probably aware of a lot of these things, but they're not good. We're in a very scary, unsound time for the U.S. economy and U.S. Treasuries and the underlying debt that backs our system. Most of people have been screaming this for years, but I think this will actually be the tipping point where it becomes a problem. So they dump the Treasuries, cause instability in the Treasuries market. Interest rates will have to spike in order to combat that and incentivize people to hold and buy U.S. Treasuries. But if the number one holder internationally were to dump, I think that other international holders would also dump. And this would be a domino effect there that would cause instability for Tether. Tether would have to mint more Tether in order to purchase those Treasuries. But I think it would cause some systemic risk, and the backing for Tether would then be destabilized and the stablecoin would come unpegged. And we've seen what's happened in the past when that's occurred for other stablecoins like Terra Luna, if you were around for that. So that's my anticipation. See Japan dump U.S. Treasuries, again, because their economy is doing well. They issue a CBDC. They want to incentivize the government, the banks, the individuals there that are in Japan to hold their own debt instead of international debt. And that'll destabilize the Treasury market and then destabilize Tether. So what are the implications there for Tether? Well, again, it provides the majority of liquidity to the crypto market. I don't know if you've ever tried to trade USDC or another stablecoin for, something through an exchange, but the volume in that market is significantly less than Tether. Tether's, you can move millions of dollars through Tether. Ripple and their ODL, they even use Tether in certain corridors because it's more liquid than XRP in certain corridors. So that becomes destabilized. That destabilizes the crypto market. We've seen a huge run-up in Bitcoin now before the halving, which is unusual. And, we've got exposure to the broader markets and systemic risk that wasn't there before because of the ETFs. So the ETFs for Bitcoin were approved and launched on January 10th this year. And now these large investment banks, BlackRock, Grayscale, Fidelity, and many others hold significant allocations to Bitcoin through the spot ETF. So if we had instability in Tether and it caused a downturn because of the market becoming illiquid, you could see a significant sell-off in Bitcoin. And that causes even greater problems as systemic risk for these investment banks, because for them to rebalance, they're still T+2 with the clearinghouse and the brokers. So they're not going to be able to rebalance their books. And if this happens over a weekend, it's even worse. They're going to have significant losses. And this happens anyway for Bitcoin. In most rallies, you see drawdowns in Bitcoin of 30 to 40%. If we saw that and the investment banks were holding those allocations like they are, and that didn't rebound very quickly, you would have huge losses that they would have exposure to. So if we saw instability in Tether, and then you had a drawdown of, 50%, 60% in Bitcoin because of, liquidity being sucked out of the crypto market in a massive way with instability in Tether, this does not bode well for the investment banks and their exposure now to Bitcoin. And the SEC, obviously, they didn't want to approve the ETFs. They were almost forced to because of the court ruling with Grayscale. And, Senator Warren and many other people have come out and spoken against it as well, that, it's the underlying asset itself is volatile and unstable and could cause problems and systemic risk. And so now that's what we have. And because we don't have stablecoin regulation to verify, make sure that Tether is stable, it leaves a gap in the market. And so now we would have Tether collapsing, Bitcoin collapsing, and in order to cover those positions and make people whole, the investment banks are now going to have to pull from other positions in the stock market, which is also very fragile at this point. You've got a few select stocks propping up the majority of the market, pushing for all-time highs. We're at peak levels of risk in the stock market, in my opinion. And I'll just say this here. Nothing here is financial advice, only for entertainment, educational purposes only. Always speak with your financial advisor before making any investment decisions. So we've got all-time highs in the stock market that's propped up by just a few stocks. The investment banks would then have to sell off positions in traditional stocks and other financial products to cover the losses that they would be experiencing in Bitcoin because they can't settle real time like Bitcoin actually settles. I say it settles real time. It's, a couple of hours, which is still much faster than T+2. So it trades 24/7, 365, where stocks do not. So now you've got this systemic risk. You've got the actual losses that would have been incurred by the investment banks that we'll have to cover. And this would cause sell-offs in other positions. 90% of the stock market is traded by bots at this point anyway. So now, once these sell levels are reached, you're then going to see these bots liquidate positions also. And it would cause a snowball effect or a catalyst that would pull the traditional stock market down. You would see a collapse and a sell-off very rapidly in the stock market. And we're already in a position where things are very illiquid because of where interest rates are. The Fed has hiked interest rates. I do anticipate some pivot at some point this year with the election coming up. However, most people are looking into March and seeing that that's not going to be the case. They're going to continue to hold rates where they are, and all things remain equal. If stocks continue to hit new highs, that's probably what will happen. I don't know when this happens. I'm just going to go ahead and say this here. This could be months out, but I think it is likely at some point in 2024 that we see this scenario actually play out, because they need to bring in regulation around digital assets, stable coins, bridge currencies, in order to create efficiencies in financial markets, release CBDCs, and move into the next phase of, financial system and global economics. So these are the things that I think could play out in order for them to bring in stablecoin regulation. Obviously, if we saw, Tether collapse on itself because of U.S. Treasuries selling off, they would need to verify that, one, U.S. Treasuries would no longer be Tier 1 collateral. The BIS would have to change that. The only other Tier 1 asset at this point is gold. So maybe they make, all of the stable coins have to hold gold or other commodities like oil as their backing, and they can't use sovereign currencies as the backing or treasuries, which would be interesting. I don't know that that'll be the case. Maybe they make it where the backing for the treasuries and the currency that's issued by sovereign nations has to be backed by gold or oil. And then you could still, leverage that and have the treasuries as Tier 1 collateral as long as they were backed. Maybe they make the CBDCs, the treasuries, and they're held in that position. We'll see. But these are the systemic risks that I see, potentially playing out. I know a lot of people are really happy right now. They're confident. They see the upside in their portfolio, especially if you're in crypto and the stock market, and everybody's kind of euphoric. And that's when I take pause and step back and start becoming concerned. And so that's why I'm putting this video out now, because I see these things looming. And this is not to fearmonger. This is just to make you aware of potential situation that could play out. So what's the solution? Say all this does play out. How do we fix this? What happens? I'd have to rush in stablecoin regulation, and that actually gives some clarity to a few assets that I like, and other people that watch this channel probably like. XRP and XLM meet the qualifications for a bridge currency, and then those could step in and provide liquidity in the market. Like I mentioned before, Ripple uses Tether in certain corridors to provide liquidity through their ODL product. XRP could step in those positions if there was enough liquidity in XRP to be able to do so. You've got BlackRock, who has Robbie Minchnick, who's the head of their digital asset division. He came from Ripple. There's a lot of correlations in people that are invested in Ripple and their success, and XRP also, that this would benefit. So let's say all these systemic risks do take place. The stock market collapses. We see a collapse in U.S. Treasuries. We see a collapse in Tether. We see a collapse in Bitcoin. Where are all those people going to run? They're going to run to gold, which a lot of people are already there and they have figured that out. You've seen the investment banks and central banks over the last 5-6 years accumulating a ton of gold. And I think they're going to run to XRP. And so if you had an inflow or influx of a significant amount of liquidity into XRP, it could then facilitate the back-end settlement of the stock market, It could then facilitate international trade and settle, transactions at scale for SWIFT. There's a lot of use cases that have been proposed and discussed over the last decade that could be fulfilled if there was enough liquidity in that asset. So that's my anticipation, is that's how they bring this in. We rush in regulation. We start using those bridge currency assets as backing and to provide liquidity in an illiquid system. You'd see Fed drop interest rates pretty significantly from where they're at now and pivot. They would have to, but that also, causes inflation. So their mandate is to keep it at 2%. They're still not quite back to 2% inflation. There's just a lot of instability in the market that would basically shore things up if this were to take place. SBI, back to the beginning in Japan, has said that all the banks there will use XRP to settle in between them and internationally in 2025, which is just 1 year away. And there's, Ripple said that in 2024, a G7 nation would adopt a CBDC, which again, I speculate is Japan, just based on where they are in the track to launching theirs. They're in pilot while everybody else is still either research or development or testing. So that's where we're at. I see the dominoes set up in a row here, and I'm waiting for Japan to knock theirs over, and things will escalate very quickly. Those dominoes will fall very quickly if that takes place. So just some thoughts for people. I'm sure there'll be a lot of people that comment on the video and say, this is crazy. That's never going to happen. U.S. Treasuries have always been the most stable thing. They're never going away. There's no systemic risk for Bitcoin, da-da-da-da-da. At this point, there is. You wanted the ETFs. You got the ETFs. You got a huge influx of liquidity. The investment banks are now exposed. And so is the broader stock market, because it doesn't settle real time. It's T+2. Let me know what you think. Type in the comments below. Is this plausible? Can it happen? What are your thoughts on this? Have you heard anybody else discussing this? And if you haven't yet, please like, subscribe, and we'll see you on the next one.